Stocks I'm Buying September 2018 edition. Welcome in, guys, to my favorite series on the entire channel, the most popular series by far in the entire channel, where I give you 3 stocks that I am planning on buying in the upcoming month. The upcoming month being September 2018. I'm going to give you all these names, and we're going to go into detail on why I'm so excited about these stocks and why I'm planning on buying heavy into these stocks. One of these stocks is more under the radar. That's going to be the first one we get into. It's more of an under the radar stock. The second stock I'm planning on buying this upcoming month is the stock I would call the easiest money in the entire stock market. And the last stock we'll get into is a stock so many of you guys want me to talk about so bad. And it's a stock I've been starting to buy, and I should continue to buy it throughout September. And they actually just reported numbers yesterday. So we're going to get into all this here today, guys. Hope you enjoy this. As always, 2 things I want to let you know about before we get into today's video. If you love stock market news related content, make sure you follow me on Instagram. On my Instagram stories, I always post a ton of information about stock market news when it comes out, especially important things I'm looking at, maybe stocks I'm looking into, things like that on my Instagram story. So if you're on Instagram, you might want to check that out. Second thing is, if you want a very in-depth course, the second link down there in the description is my 51 video stock market course. That is on sale for the rest of this week. So if you want to go ahead and take advantage of that course and that huge discount, go ahead and do that. It's the second link down there in the description. And that should definitely help you out with everything I look for in a stock and everything like that, guys. So hope you enjoy this. As always, let's get into this, guys. The first stock up is U.S. Steel Corporation. This is a more under the radar type stock. Ticker symbol is X on this one. And U.S. Steel, it's a steel company, okay? It's a steel company, and this company trades at a forward PE under 5 right now, okay? A forward PE under 5. Let's keep that in mind. That's an unbelievably low valuation there. I mean, it's very rare to see any stock under a forward PE of 10, let's put it that way. To be under 5, there's very few stocks that are trading at that type of forward PE, all right? This is a company that should continue to benefit for years into the future, basically because of Trump, has gone in this big thing about tariffs on China and especially steel, 25% tariffs, which has basically ended up pushing up pricing for steel and aluminum in the United States of America, the demand for all the U.S. corporations. Not only that, but it has increased pricing power considerably for U.S. corporations, because now a lot of these U.S. corporations feel like they're on the steel side, feel like they're playing on a level playing field where China could just dump steel over here all the time for very cheap prices, and it made the U.S. corporations almost, start to go out of business slowly but surely. They would shut down factories after factories. And what we see is we see them now starting up more and more projects. U.S. Steel just announced recently that they're going to start their second blast furnace up in Granite City, which they just restarted their first here a few months ago. They're expected to start their second one in October. They're also talking about they're going to invest $750 million to modernize another factory. So they're spending a lot of money getting a lot of their old factories restarted, and this is a big thing that should help push out a lot. They should be able to supply a lot more steel out there, and demand should continue to rise for U.S. corporations that produce steel out there, as a lot of companies just aren't going to want to use steel from foreign countries with a 25% tariff. Who would? Okay, so if we look here, these numbers are outstanding, okay? Net sales here up almost $500 million year over year, okay? From $3.1 billion last year in the same quarter, they did over $3.6 billion here in this current quarter they just announced here. Adjusted net earnings came at $262 million versus $189 million of previous year for the same quarter. Earnings per share came in at $1.46 versus $1.07 last year. So a very impressive numbers there. This company, for a steel company, has actually a pretty impressive balance sheet, about $1.2 billion in cash equivalents, around $2.5 billion in long-term debt there. And this is a company that, with all these profits pouring in over the next few years, they should be able to take down that debt completely if they want, or they could honestly probably start using a lot of that money to start paying out in huge dividends to shareholders, which will attract a lot more investors. So when I look at this company, this is a company that should benefit in a huge way. As long as Trump is president, it should benefit in a huge way for a long, long time to come. Now, there's always risk with U.S. Steel that, okay, next political party that comes in, maybe they take off the tariffs, and then all of a sudden, U.S. corporations are really screwed as far as the ones that produce steel and aluminum. That's always a possibility, and that's always a worry. But if I ever felt that something like that would happen, I would just get out of the stock. But for now, it looks very good for the company, for the coming years. years. And also from the perspective of the amount of growth that's going on now in the US economy is phenomenal. So with all that being said, it's a company that the money should just pour in hand over fist over the coming years, and this valuation needs to pick up. They're trading under a 5 forward P is ridiculous, guys. This company number 2 is Facebook. This is the company I call the easiest money in the entire stock market. Right now, Facebook is trading at a forward P of under 21. And to that, I say, are you kidding me? You must be joking me. A forward P on Facebook with the type of growth this company has, that is almost laughable. This is the easiest money in the stock market by far out there. It takes a cake over everything else, guys. Let's go through some of these numbers here at Facebook, okay? This is daily active users number. Now, this is just a Facebook platform, okay? This has nothing to do with Instagram. This has nothing to do with WhatsApp or Oculus or anything like that, okay? This is just Facebook numbers. Daily active users of Facebook of nearly 1.5 billion in the last quarter, all right? Monthly active users of over 2.2 billion just on Facebook, okay? Once again, these numbers do not take into account Instagram or WhatsApp or any of those massive platforms, which Instagram, you know, is the one that's the hottest right now by far of any social platform out there, okay? It's Instagram, that's where everybody's at. That's the cool platform, okay? So those are amazing numbers for the old legacy model of Facebook. They're still putting up amazing numbers, okay? If we look at revenue here, okay, revenue is off the charts. They did $13.2 billion in revenue for this past quarter versus they did just over $9 billion the previous year in the same quarter, okay? Now, keep in mind, this is while a quarter in which executive management wasn't even really focused on the business that much. They were so focused on this Cambridge Analytica stuff that came out during the quarter. They were focused, you know, Mark Zuckerberg had to go to Capitol Hill. Like executive management really wasn't focused on revenue or profits or any of that stuff this past quarter. They were totally focused on this whole, you know, thing that took over the company and took over all the attention. Cambridge Analytica, oh my gosh, what are we going to do with our business? That's where management's focus was, and they still were able to grow revenue at that type of clip. When executive management can be unfocused on something like that and still grow revenue, that is off the charts, guys. Average revenue per user is unbelievable, okay? But this is where a lot of growth still has to come with the company, okay? So average revenue per user in the US and Canada for this past quarter came in around $26, all right? Where I see that going long term is in the US and Canada. I see this going to a $40 to $60 clip in the US and Canada long term, like looking at it from the next 3 to 5 years, all right? Worldwide, right now, if you take the whole world into account, we're at around $6, okay, just under $6. I see that being well over $10 long term, $10 to $15 range, somewhere in there within 3 to 5 years. Europe should be able to grow to somewhere close to where US and Canada is currently, if we're looking at it from 3 to 5 year perspective. Whereas right now, Europe's around, you know, a little less than $9. 3 to 5 years from now, it should easily be somewhere around where US and Canada is currently, which is around that $25 range. Asia Pacific, that should be able to grow to over $10 average revenue per user, and rest of the world should be able to grow to about $6 to $8, I estimate. So there's going to be a why is this? Why is average revenue per user going to go up massively? Okay. One is there are going to be more ads as time goes on. The second part is mainly just because there's they have the attention, okay? Facebook, Instagram, all those platforms, they have the attention, they have the people's attention. There's a massive amount of money that's going to flood in from the sidelines, okay? Money that right now is spent on television advertising and radio advertising and newspapers still and like all this ridiculous stuff where people aren't even paying attention, television being the main part. That money over the next 3 to 5 years is going to move like a tsunami. Move like a tsunami into Facebook's pockets, okay? Google as well, but Facebook is going to be one of the primary beneficiaries because they got the attention with WhatsApp, with Instagram, with Facebook Messenger, with Facebook. It's just ridiculous, guys. So that money's going to move over in a massive way. It's going to push up ad rates for everybody. The little guys that used to be able to place ads on Facebook, you know, for real cheap are going to get flooded out by the Coca-Colas and the Budweisers of the world and you know, the Ford and all the big companies, Apple and Samsung, all those big companies are going to be, you know, pricing everybody else out of the market, and that's just the way it is. No different than television advertising. Turn on a football game, turn on a baseball game, you don't see any little advertisers in there, okay? They're all big, massive companies. That's what's going to end up happening on Facebook, Instagram, and these platforms over time. These big companies are going to wake up and say, wait, we just spent $1 billion on television last year and we got crap for it. Let's spend $1 billion on social this year and watch to see our results. Operating margins, what freaked everybody out in this past quarter. So operating margin dropped to 44% from 47% in the previous year. And this really freaked Wall Street out. They go, whoa, operating margin just fell in a huge way. That's because of this whole Cambridge Analytica situation came out. Facebook's basically, having to hire 10,000 plus employees this year, okay? So what that's doing is this year it's going to make operating margin kind of look bad. Let's just put it that way, or not as good. Operating margin of 44% is still amazing, but it's going to make it look not as good because they're hiring 10,000 plus employees. All those employee costs, it's a lot of money to weigh on the company, okay? But keep in mind, they hire all these 10,000. They're not just going to magically hire, double that next year and another double that the following year or something. What Facebook's going to do, they're going to hire all these employees. It's going to be a huge cost. And then all of a sudden, operating margin is going to start moving up and moving up again because average revenue per user is going to start moving up again. Revenue in general is going to start moving up again. And all of a sudden, the operating and they're not going to massively hire a bunch more employees. This is a massive year for them hiring employees. It makes operating margin look bad in the short term, but you look at it from a 3 to 5 year perspective, it's going to look really good, guys. It's going to look really good. Net income wise, once again, not a quarter that they were focused around net income and revenue and all that stuff. And look at the number. They did $5.1 billion net income versus the same quarter last year of well under $4 billion, okay? So just massive, okay? Diluted earnings per share of $1.74 versus $1.32 the previous year. And lastly, I love to just keep it off here, which is the unbelievable balance sheet. Well over $40 billion combined between marketable securities and cash equivalents, and not a dime on that balance sheet of debt whatsoever, okay? So when you look at Facebook, it continues to be a growth engine. It's got the world's attention, and just all this money is going to move over to like a tsunami over to the Facebook platforms and Instagram platforms and WhatsApp and on Facebook Messenger and all that stuff. All this marketing money is just going to move over like insane over the next 3 to 5 years. It's going to push ad rates up. Average revenue per user is going to look better and better. Profitability will continue to explode. They will continue to just add cash onto that balance sheet, marketable securities, which then they can go out and purchase more companies with. Maybe the next Instagram or the next Facebook, they can go out and purchase that, or they can just say, okay, we're going to buy back more shares or start paying dividends. Like, there's so many possibilities for the company. So when I look at Facebook, easiest money in the stock market the next 5 years. Bottom line, the third stock up is one you guys wanted me to talk about, which is Alibaba. This is one we just started buying over the past, 2 weeks or whatever. And Alibaba, okay, it's a company that's trading at around a 22 forward PE right now. Not a company that is focused on profitability at all right now, okay? So it trades at somewhat of a fair valuation. This is not a company that is focused on profitability at all. Alibaba's main focus right now is 100% on growing the overall business and capitalizing on all these unbelievable opportunities in front of itself, okay? Alibaba, if you didn't know, they own a ton of different businesses. The main businesses have to do with retail, okay? Tmall, Taobao, and some of those things. Alibaba reported mixed financial earnings. As they say, this is a quarter they just reported yesterday. Revenue soared 61% year over year, boosted by its e-commerce business and its fast-growing cloud division. So revenue came in at 80.92 billion yuan versus 80.75 was expected, so a very slight beat there. They slightly missed on adjusted earnings per share. It came in at 8.04 yuan versus 8.15 yuan was expected there. So a slight miss. The cloud computing revenue is off the charts right now. It grew 93% year over year. Cloud computing grew 93% year over year. So their main businesses are on fire, okay? They continue to invest money aggressively in things like food delivery, in things like distribution, everything across the board, logistics networks, all that type of stuff, okay? But when I look at Alibaba, it's not just about the retail play and how they're, even though the way they run their business is very different than someone like Amazon runs their business. But in terms of, if you're just comparing it to, if you're looking at the United States of America, which the majority of my viewers are United States of America viewers, Amazon is incredibly important in the United States of America. Alibaba is like twice as important to the Chinese consumers out there than what Amazon is. So just take that into your mind for a second. It's like, are you kidding me? The cloud is where a massive potential for it, okay? Right now, they're growing super fast, their cloud business, okay? Amazon's way out in the lead. If we're looking at worldwide companies, Amazon's way out in the lead in front of everybody, okay? And they have a great opportunity to win cloud long term. Amazon does, okay? But when I look at the cloud business long term, talking 3 to 5 years from now, and maybe even further than that, but really like 3 to 5 years from now, Who are the two main players I see in cloud? I see Amazon without a question, and I see Alibaba having the potential to be number 2 within 5 years, okay? I think Google and Microsoft will definitely be right there, just kind of lagging a little bit behind. But when I think about who's going to have the number 1 position in the Chinese market, it's going to be Alibaba, okay? They got to the game late in cloud, but they're catching up really fast with these unbelievable growth rates of 100%, 90+%, okay? So when I look at cloud long term, the two big dogs that are going to win this worldwide are going to be Amazon and, in my opinion, Alibaba. Google and Microsoft will be very closely behind. So when I look at this company, unbelievable opportunity. Let me know what you guys think about these 3 stocks. I would love to hear from you guys. As always, make sure you follow me on Instagram. Thank you for watching and have a great day.